Hey guys, Boris Haas from BK Forex. Welcome to our weekly Forex technicals for 6/3 to '07. The central question of the week is going to be, I think, dollar yen 100 hold or fail. As always, trading foreign exchange and margin carries high level risk, may not be suitable for all investors. So I ask you to read this disclaimer very carefully and understand all the risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. Well, let's take a look at dollar yen. I think it's going to be the story of next week. This is an hourly chart. I'm going to actually expand it out. We're going to look at the 4-hour chart. Well, on the hourly chart, you can also see this quite well. You see the 100, 150 level just continually being tested. Let me see if my new mastery of the of my ability to do lines can be seen here. So yeah, here's the 150 line. Basically being tested 1, 2, 3 times. We dipped several times below it and held above the 100. I think that's really going to be the critical thing. There was a lot of talk about the fact that there was optionality on the let me just get rid of this. There was optionality on the yen, but we also had obviously positive US data, which helped repel the shorts for the near term. But if you look at dollar yen on a sort of let's go to the 4-hour basis because I think you can see this just sharper. Look at the dollar yen here. Let me see how well look at this. 1, 2, 3 lower highs, basically continuing lower highs on dollar yen. And as I always say, the critical thing when you're looking at the currencies in a downtrend is the highs, in an uptrend is the lows. It's the weakest component of the trend that communicates the strongest message. So the fact that the highs are continuously failing at lower levels, right? We failed. Obviously, this was a spike high on 103.50. Then we failed at 102.50. Then we failed at 101.50. I think, which is kind of interesting. This is just a couple days ago, and now we basically are starting to fail at 100. So what will turn this from a negative bias to a more neutral positive bias? The only thing that can turn this to a more neutral positive bias is first and foremost if we retake 101.50, which I think is the first major swing high. So we would have to, okay, let me just get rid of this. Just bear with me. Not the easiest thing in the world to do, but basically, oops, sorry, wrong thing. If you look at so 101.50 to me is the first level that you want to see across to the upside. 102.50 obviously is a second. If we can recapture both of those, that creates a much more neutral stance in dollar yen. It would suggest that we've basically bottomed the ranges now being formed, and we could make another run towards the 103.50s. But until the currency essentially crosses those lines, it's still sell the rally mode. I would even say it's probably relatively safe to assume. Of course, there's no guarantee, but it's relatively safe to assume if you were sort of analyzing this chart that even if we come up to around the pre-102s, even through the 101.50s, sell the rally mode is still going to be the more dominant trade, mainly because the highs just have not been crossed. Now to the downside, obviously, everybody eyeing the 100 level. We failed to cross it because there was some positive US data that lifted us out. Next week, of course, is the US NFPs. There's just a ton of US data, period, and it's really going to give you a good picture of the strength or the weakness of the US economy. US bonds have been rallying on the assumption the US economy is getting stronger, that Fed is going to have to taper eventually. They've been front-running this whole tapering story already, and by front-running the tapering story, that's given the dollar a tremendous amount of lift. But that's going to be a very, very interesting excuse me, I'm still sick. That's going to be a very, very interesting development this week, because if that's true, then you do have a very strong potential for a turn here. If that's true, basically, then you could make a very decent case that 150 was the bottom, wash out in the yen, and you could have a turn back up to the upside. If it's not true, if the data continues to disappoint, then the pressure to test 100 is going to be very, very strong. The last thing I think I want to leave you with dollar yen is that because we're going to be so data dependent, and because we are so close to key levels, the prospect of massive volatility, that is let's say a break of 100, then a change of sentiment and a massive short covering rally, then another change of sentiment and a switch down, very, very high. So I think the one thing that I think you could walk away with relatively degree of certainty going into next week is that the vol in dollar yen is going to be very, very high. There's just tremendous amount of interest on both sides of the trade and lots of data on both sides of the trade that could trigger some very, very nasty moves. That's why you need to be very cautious and very careful in your positioning. And I would say, take profits quickly if you get them, and get out of losses quickly if you feel them, because the movements could be very, very volatile as we get around these levels. But I do think that a break of 100 combined with negative US data could trigger a massive liquidation and take us 99s, maybe 98.50s very, very quickly as all the dollar yen bulls begin to panic and bail out of the position. So that's kind of how the main story of the week shapes up. Let's take a look at the other instruments that are trading. Euro still looks relatively bullish. Again, here, let me see if I can, where's my free hand here? Here, the story is to the lows, right? We have higher lows continuously in euro yen, and excuse me, euro dollar, and we've actually created further higher lows here at the 2900s. As long as the sort of the 2950 holds, right? The prospect for us to redouble, retake the 3050, the 3050, 3060 is going to be a key level, but I think we barrel through. 31 opens up, and really it opens up all the way up to 3150 before you have any significant resistance on the euro dollar. So the bias in the euro dollar remains to the upside as long as these lows hold, because we're getting higher lows on the euro. Cable, very, very similar, sort of a little bit different pattern. We have a W bottom pattern. So cable clearly found some very strong support at the 150 level. A little bit of spiking out over here on Friday, but still the bias, as you can see, with lower highs. Boy, I got to tell you, this is one of the worst drawing tools I've seen in a long time. Anyways, you get what I'm saying. Lower highs basically gives you the opportunity to make a run possibly to 5300. Cable just has a lot of chunkiness in front of it. It has the 5250s, 5300, and then really 5350s as sort of big chunky moves. But it can also make this big, burst up. There's a lot of cable data next week, a lot of UK economic data. If that proves to be positive, it could give us a lift to the upside. This actually translates into, I think, some interesting cross stories, because where's my euro pound? Can I not find my euro pound? Just bear with me. Here's euro pound. Euro pound is sort of, this is really now becoming a pure euro cable story instead of just risk on, risk off, or safe harbor plays. And in many ways, I think it's a referendum really going to be on cable data this week. So if cable data is positive, I think the euro pound could kind of definitely topping out here at this 85, 50, 86 level. We could come back down to 85s on a test. Euro cable, if cable data is negative, I think we have a chance here to take out the 86s. So watching this, watching the ranges here, we're at 85.50. We've been sort of hugging that for all of the week. But the directionality of this move is going to be based upon cable data. And if we take out the 86s, we may even be able to. Let's just go down to the daily charts and see where we stand. You see how much chunkiness there is over here? There's all this resistance. If we sort of break out higher above 8600, there is a potential here to close this gap and maybe take us all the way out to 87. So I think euro cable is one of the more interesting crosses in play next week. And lastly, let's take a look at the Aussie. And Aussie is just, continues to be a one-way disaster. Trying to buy bottoms here has been a sucker's game. But never say never. There's 95 still continues to hold. 95 is a very, very critical hold in Aussie. A give of 95 probably going to trigger another round of stops. Probably take us down to 94. Maybe 93 before we begin to sell out. It's one of the more interesting things about currency market is that it does eventually settle. It does eventually bottom out, but usually if it bottoms out, it settles after everybody has given up on it. So the first thought was that we're gonna bottom out around 98s, and that failed. The second thought was going to bottom out 95s. Maybe that's going to fail. If that fails, certainly it's going to be a trigger back down to 93s, but eventually is going to bottom out here, and we will stage some sort of a rally. In the meantime, this turn was clearly, I think, a pretty ugly signal to the longs, and we need to desperately have the 95s hold if Aussie is to preserve its consolidation pattern here and then move up. 97 still capped. If we break 97 to the upside, that could provide a lot more lift and positive sentiment to the pair, and we could have more short covering over to 98s. For now, Aussie still remains a very, very strong sell, albeit it's coming into very, very near-term support. So there isn't much juice to the downside. and there's quite a lot of risk to the upside. Not exactly a great trade on either side of the aisle. But few people I know who have been shorting it have been very successful. So best of luck to them. Anyways, that's how the trade shapes up for the week. I wish you guys the best of luck and the best of trading. As always, trading foreign exchange on margin carries a high level risk, and you should speak to your independent financial advisor if you have any doubts about trading this stuff. I wish you the best of luck and the best of trading. This is Boris Schlossberg, over and out.